GKFX Prime presents the Market Analysis Webinar.
Hello traders, welcome back. Yes, it's that time again, another weekly analysis video for you here. My name is Dima and I'll be taking you through some chart setups for this coming week. We have FOMC behind us from last week. We've had a few moves in the market if you followed the week last week, and we do have a few small bits of news for this week as well. We'll go over that in a minute. Let's have a look at the charts and see what the price action is showing us. So as before, we've got a mix of different charts to look at for this week, and I'll go through what I've captured for this week. Let's have a look at the charts. So I'm going to start with a major pair here, the Aussie dollar. Now, the reason I picked out Aussie dollar here is because we have some interesting price action. If you have a look at the chart in front of you and look at these moves, we've got this big move that ran up higher here. And now we've got this very slow, meticulous, very drudging kind of movement in the market. Is very messy here, but we are creating lower lows, as you can see here, and lower highs. And last week we did close weak. Sorry, this is last month, this is month's chart, so this is the current month. If I go to the week, here we go. Last week closed weak right here. A bit of a mouthful there. So why am I looking at this one specifically? Well, because we had this move and the retracement has not even reached the 50% level. So what I like to do is I do like to see the market reach at least to that 50% level before expecting a reaction, and actually coming down into the 61.8 as well. So considering that we are now still at a discount, if you take this whole range right here, sorry, we're at a expensive, not a discount, not a cheap place, we're at an expensive place. So we are more inclined, I'll be more inclined to sell. I would say it's a higher probability that the market will sell further. If you take this whole kind of range, here's the 50% and we're above that. So we are looking at an expensive area. Now that the week has closed weak, I'm looking at this swing right here as the next target. And after that, obviously I'll have the 50% and possibly the 61.8. So that's quite a way away. So now I've got that nice distance. Going to look at the 4-hour chart. And let's see what we've got here. So we've broken this swing low here. We've closed below. And now to get a nice, better price, I'd be looking at a possible retracement into this zone here to go down further into my first target right here. And I would look at this as a higher probability setup. Of course, the market may not do that. We may just collapse from here right into the level, in which case I would look for a pullback into an area of significance. One area I can see building up is right here. But we'll have to see how the price action develops as the days go on. So that will be the setup for Aussie dollar. This swing point right here, when the market reaches that, I'd like to see what happens then. And no guarantees at all that we'll be moving towards the 61.8. It's just probability. So we'll see what happens there. But that'll be definitely a nice place to take some profits, if not all, over there. All right then. That's the Aussie dollar. And we also have a continuation, as a side note, of dollar bullishness. If you look at the dollar as a whole across the markets, we've got the dollar heading higher, creating new highs, and it finished bullish last week. So with that, this is also adds to the correlation, adds to the strength of this setup, and adds to the probability. Okay, that's the Aussie dollar. Let me go on to now the pound Swiss, which I had a look at. if I look on the monthly time frame, again, similar kind of picture to the Aussie dollar. We had this big move here from this week, and now we have a slow sort of, oops, let me move to where the chart is. We shifted a bit, here we go. So now we have this slow move down, and we are showing very obvious signs of weakness. If I go to the weekly, very obvious bearishness here. The next swing point I could see is right here, where I will look for the market to trade to, and then I'm looking at this obvious swing point right here. So with this clear bearishness that we've now broken this low, and we're now clearly showing signs of bearishness, I'll be looking at a possible sell. So again, I'm going to go down to the 4-hour time frame, and what I'm seeing here is an obvious place where the market pushed away from and just went down, completely sold off very heavily, and created this gap in the price in the market, not offering any opportunities to buy for many people. So a nice place to short from would be up here. If the market reaches that level, I'll be looking for some kind of interesting price action, and for it to continue on its downside. Squeeze this up a bit here. Downside into this as a first target, and to here this level 1.158 as a second point of call. Now, if that doesn't happen, once again, let's see what happens if the market decides to just drop straight down from the start of the week. Let's see how it goes. We never know. But if the market doesn't reach this level, and I'm not really going to be interested, the probabilities begin to reduce and the risk reward begins to reduce, and it's just not a very favorable setup. So this is higher probability for me at the moment. If you look on the daily, again, very clear. After we had this brief stall here, bearishness, very clear continuation to the downside on the pound Swiss. So that's the setup I've got here. Okay, now I'm going to go to Euro Aussie. Let's have a look on the Euro Aussie. I'm going to go to the monthly time frame just to look at a bigger picture for a moment. I'll show you why I'm looking at this. So we've got this move down that happened recently this year from the beginning of February. And if I look on the weekly, you can see this very big move down, and we're now in this retracement phase of the market when you look at the bigger picture. And this is since the start of the year. Now, again, you can see the market reached the 50% level, and it's kind of stalled here. It's kind of gone sideways and it's hesitated. It's not bounced off and just continued down. We've had these very indecisive price action, this sort of range right here. So I'm looking at this area. And because of that, that could indicate that perhaps the market is not ready to go down yet. Just delete this. So I would look at, if you can guess already, this area right here. Beyond this candle, between the 50 and the 61.8 retracement, and possibly even further. But I'm not going to worry myself over that for the moment, because this is the weekly chart, so it will take some time. Now, the other clue here, if I'm just reading the price actions, you can see the candles. We're leaving wicks to the downside here, indicating the market doesn't really want to go down. And now we've created a sort of swing point, and you can see last week this close, this candle is very bullish, and the close is closed higher than the previous week, the week before that, the week before that. If you just look at the body of the candle, week before that, and it's really created clear bullishness. So I also can see here on the daily, if you draw a trend line here, you've got that break, it came back, and now it's pushing higher once again. And to add to that, I'm also seeing this level right here, the swing point being broken. So I am looking at more bullishness into next week. And that would also coincide with the bearishness in Aussie dollar, which I was looking at earlier. So if that is the case, then I would also, of course, favor Euro Aussie long, because Euro Aussie long would be weakness, assume weakness in the Aussie. Let me have a look now at the lower time frame. So now what I see is this push up here. We broke, if we take away this, we broke this level right here. Obviously we'll be looking at the next point, which would be up here, and then going higher into 50, and then the zone that I marked out earlier. So from here, what I'll be looking at is a possible retracement into this zone, which has, the market has moved from and moved to. So we've got this market playing around this zone here. So if it comes back, there'll be a nice cheaper price to work with, and then that move higher. So I'll be looking at the price action again a bit, and we want to see some confirmation, want to see that the market actually wants to bounce off this level, and then we'll be looking to take a trade. So that will be the high probability scenario here on the Euro Aussie. That's what I prefer to see. Don't know if the market will do that again, just like as before, may totally collapse from here. And obviously if we break this swing point right here, I'll be completely deserting this idea, because it will not be favorable anymore. The market will be breaking we're breaking a low, so that would create some indecisiveness, and then after that we'd have to consider that this whole thing is a sort of range. So we'll see if that's the case, if the market comes back right into the heart of the range. And of course, if it breaks this high, that would add more argument to the bullish side, and we may get a retracement here. The market may, after it breaks this high, create retracements, and then we're going off into the higher levels on the higher time frame. That's the Euro Aussie. Okay, we're gonna move to, let's move to, what should we look at next? Gonna go to dollar rand. Go to dollar rand. So let's keep in mind what we were looking at overall. Yeah, so far we've spoken about dollar being strong. We've spoken about Aussie dollar weakness, which again is dollar strength. And with that idea of dollar strength, then the dollar rand would be a buy. So strength in the dollar, weakness in the South African rand. We actually looked at this setup last week, didn't we? If you have a look back, looking at this zone, was interested in the zone to go lower and then create a buy scenario, which it did. Now I'll be looking at the next point of interest, which would be this level here, which I marked out, the 50 level, and then beyond again the 60 level. If I just put a line on the 60 here to make it obvious, and that is the retracement of this whole entire larger move. I can even go to the monthly to make it a bit more obvious for you, and this will be the next point I'll be looking to target. Now you can see very obvious that big bullish pin bar candle engulfing the previous week here and the week before that, and then last week we closed bullish again. So obviously a lot of argument for the bullishness of the dollar rand chart. So now what have we got here? We have some consolidation here, so I would like to see the market break higher, break beyond this level right here, which is the previous swing point on the 4-hour, and then possibly a retracement. Let's see if the market gives that to us, and then a continuation higher. We may also have a bit more consolidation here, a bit more sideways movement, and if that's the case, then a breakout higher after it creates a lot of sideways ranging movement. If it does that, like so, that means the market is setting up for a bigger move, and I would like to see a nice breakout of that range. So here was that point where the market moved off from. I think this was the, I think this was the NFP or FOMC. I can't remember off the top of my head, but this is where the market moved away from. And now, definitely not looking to break this low or this low, just looking to go higher on the dollar rand. Could also, if you like, very obvious trend line here. So it'd be nice to see a nice bullish. It hasn't quite broken with conviction yet, has it? It'd be nice to see some really strong bullishness right here as the week progresses from the start of the week. And then that would be a nice situation for the buy scenario. Okay, so that's the dollar rand. Let's move on to next. What should we go on to? So we've covered the forex pairs here. We've got the majors, the minors, and the exotic dollar rand. Now let's go to gold. I was looking at gold and silver the last couple of weeks as well. Wanted to see some more bearish price action, and we have had a very funny couple of weeks, it looks like. We had this original kind of consolidation for a few weeks, and then we had this very sharp move higher, sharp move lower, very lots of uncertainty happening here. But I think I mentioned that if this blow gets broken, I'll be interested in the sell scenario, and we had this very strong bearish candle here. So I am looking at a bearish scenario here, even though we do have this very strong wick, and the market closed last week almost near the bottom, even though it was weak. So it would have been nice to see it close lower to add to the bearish confirmation. So at the moment it's a bit indecisive for me, although I'm leaning towards the short being the higher probability. So how am I going to approach this? Well, I'm going to have to be careful here and see how the price action develops. Now there's two scenarios I see here, whether we are actually going to the upside or to the downside. I can see this big range right here. We have broken this level, but we've come back right back into this range. So gonna have to be a bit more careful with this one, because it's not very clear at the moment. We'll favor the bearish side. Now, remembering once again, I'm going to bring this up again, but obviously it's a good thing to remember, because gold is priced in dollars, and at the moment I'm bearish on the dollar. Bullish on the dollar. With the strength in the dollar, I would expect some weakness in gold, with gold being inversely correlated most of the time, but not always. So what I'd like to see from here, I would prefer personally to have a break of this level right here for the market to go lower. Again, retrace, break, retrace, give us a nice better price, and then continue to the downside. If I look on the weekly, the downside will be here at the next swing point. That will be the next target. And after that, the next obvious one is down here. Okay. Now, the other possible scenario I have to consider is that the market may not do that. It may break higher, and if it moves higher and it moves beyond this level, that would be a break of a major structural point, and then I'm going to have to shift my bias and shift my outlook into a possible bullish setup. If I look on the daily, you may have already seen, I've marked this out, this sort of level zone where the market has been bouncing off from. I'll be looking at this level for the next target if we are indeed going to break this level and then go bullish. And if we don't, we break below, then I'm looking at this level right here as the next target to reach for. So the probabilities are not great on this gold setup at the moment, but I'm going to have to keep in mind, going to have to be flexible, particularly in this situation, and I'm going to lean towards the short here. So I do favor the short. So that's gold. Let's go now into S&P. Right, I'm gonna just go through these markings that we had last week. And last week, what I was looking for is for the market to reach higher, as you can see, marked out here into this zone or this zone, and drop. However, it did not do that. It was so heavy and the market was so inclined to go lower that it just, you see, we created a gap, it dropped and kept dropping, had a brief retracement and just kept dropping. So there was no opportunity here to enter. Basically nothing to see here, move along. And gonna have to look for something else. And what is that something else? Well, with this continued bearishness, we're gonna be obviously looking for a short. I did mark this level out, if you remember, still here on the chart, which we haven't reached to. The market hasn't reached that point. Let me just straighten it up a bit. Okay, so a market hasn't reached that point, so I would look for it to reach here, and then the next level will be this point that I marked previously. So would like a nice better price. And where is that? Well, sorry, well, we've got this level here, and then an even deeper retracement, which would be nice, would be right here. So let me just go to the daily chart. At the moment, if I draw a fib from where the market moved off from, you can see this is the 50 level, and here we've got this 61.8 and 78 beyond. So it would be nice to see the market move higher into these levels, give a nice retracement, and then once we see that nice price action and that continuation to the downside where the market capitulates once again, I would expect to see that drop yet again. We've got these very deep, very meaningful drops. Every time the market tries to go high, it's been dropping, creating lower lows, lower highs, and very obvious to see that. Now we may get a bounce off this level. Let's see if that happens. Then I'm going to be waiting for that short scenario, and this is where I would like to, well, be interested for the high probability at the moment, because we're at this cheap price. Don't really want to be selling it from here. The market has made a very significant move, big move from a couple of weeks ago, so don't want to sell it at this moment. I want to sell it from a nice expensive price, which would be up here. So let's see how S&P goes. If we have this turnaround on the 50, 61.8, or maybe even higher. And I do like this higher price because there's a nice big gap here. There was only selling. I'm just going to mark this gap of the 61.8, between the 61.8 and 78. And that will be a better, of course, a better price to sell from. So let's see how the market reacts. If it gets there, it may, of course, just drop. We have to be very flexible here. If the market continues to be this heavy, which looks like we are in a very major correction in the indices markets, then we may just be having a complete drop from here. We'll have to see. It's going to get very, very interesting, isn't it? So that's the S&P index. Now let me move on to oil. Right, oil. Well, here's the markup from last week. And last week, once again, this was the area I was looking to trade from. And you can see we had a big bullish candle, big reversal of this area, even breached much lower, gave a very brief move up, and then actually failed. So this may have been one of those losing trades. Analysis was there and the market just did not want to do that. So we have gone lower. We have gone lower and we've broken this level right here. Now, if I just delete this box, which I drew the range, if I just delete this, let me just delete all these markings, go again to the weekly. What I seen on the weekly is that we are in a bullish scenario. We're very clearly bullish. We look at the monthly, we're going higher, higher, higher. We've got these brief periods of pauses on the weekly, and we can see that the market has created higher higher highs, keeps going higher, higher lows. So we're still in a bullish scenario. And last week was just a big drop. So this big drop indicates a possible retracement, a possible pause, and a healthy retracement, which would be good for us if it didn't work out last week. Might be good this week because then it would give a better price. So once again, I'm going to stick to that bias of a higher price, and I'm going to look at the next possible place to buy from. Well, the next possible place that I do see is this zone here, which we are at right now, in fact, just as the market opens at the beginning of the week. So we haven't breached this low, and if the market does breach this low, then obviously this whole idea about price going higher would be invalidated, and there would not be a buy scenario any further, and probabilities will have dropped significantly. Now I can see that after this big drop, or big old drop here last week, right at the end of the week, we've got this candle, this pin bar, which is showing some signs of bullishness, a possible reversal. Now I don't know if that is the case at the moment. So what I am going to see, if it is respecting, so to speak, this zone, and the market is going to react off this zone and trade higher, I would like to see a nice move away, then a retracement, and then a move higher. So we've got these old highs right here, and we've got this ultimate high up here at the 126.5, which would be the ultimate target here as the first target with these highs, and then the target at the more extreme high. So 121.3, that's the first level I'm going to pay attention to, and let's see if the market provides this. We may see some consolidation here, as typical in points of reversal. I'm just going to have to wait for a nice push away, some nice momentum to come back into the market to show us that it wants to go in that direction. And now if it collapses, I'm gonna leave this alone, and the probabilities for a buy are not going to be there anymore, are they? So that is that. Got oil, and yeah, if any of you looking at these candles, looking at this candle, thinking, oh, this is very bearish, we're going to be bearish next week. This bearish day, this was Friday, looking at the week, bearish week, I might be bearish. Lots of people would have been trying to jump into this to sell, but well, it's not a sell scenario yet, because if you look at the higher time frame, we're still bullish. Higher time frame usually wins, if you noticed. Okay, so that's oil. Let me move on to last one. I'm going to look at crypto and Bitcoin as before. I think we've been looking at Bitcoin for the last couple of weeks, haven't we? Well, this was last week. Here was the week before that, and the week before that, and it's been a roller coaster ride for lots of people. Well, we can see here from the area where we were looking for the market to react, it did not react off that. And because there was no reaction, well, there was no trade, so there was no setup here. So I hope you didn't take a gamble here and just enter the market willy-nilly. As you can see, well, we had a big, huge collapse, and that is one of the situations that I outlined as a possible break below this level right here would invalidate that buy setup, which it very clearly has. So no setup here. This is just one of those that just gonna have to let go. Didn't work out. There was no buy there. It was just a straight drop, a very heavy market. I'm just gonna delete these. Very clearly does not want to go higher. So now we in fact broken this major low here. We're now reaching towards the 20k mark with a significant number. Zooming out into the weekly, got this very big large drop. So now that we've broken the significant levels, we are going lower. I'm going to go into the monthly to see the bigger picture, and now I am going to look at this significant high right here, which if I draw into further into time, you can see that we've almost reached. So we're going to look for more bearishness. Now that the week has closed very clearly bearish, clearly a sell scenario, I'm going to look at the lower time frame. And once again, what have we got here? You've probably seen this scenario before, spoken about in the other charts. Price action repeats itself. We've got this range here. If I draw a fib from the place where the market moved away from and dropped, I can draw the fib here. I can see that the 50% level is right here. And got a 61A here. And beyond is this gap here and the 78 level. So if I just delete this fib, so if I'm going to look at a sell, I'm going to really want to see a better price. So really want to see the level, this level right here, first of all, 26K level, and then after that possibly the 27,000 level, and then we want to see a nice reversal. You can see this big gap in price right here. So that is a very good area of interest, because looking at this whole move from where it is right now, and if you take this whole level, divide it in half, this top part right here is the expensive level. So I want to be selling from the expensive area. This is sort of zone here. I'm going to mark out another zone right here. So would really like this area right here as a point to sell from. Now, of course, may not get that. If I look on the daily, squeeze that up a bit, we may not get that. We may get another continued drop, just like in this scenario right here where I was looking at a buy. It didn't do that. It just dropped. It was so heavy. And now that we see the market very clearly very heavy, all this was just a brief accumulation, a range in the market, just in preparation for it to go lower. So now clearly very, very bearish, very weak market. If I look here, the previous swing point on the higher time frame, I'm going to look at this point as a target as well, because we're looking likely to reach this 19.5, 20K level. We already reached it. Yeah, we already reached the 20K. So this point here, that would count as a possible resistance support. The market could bounce from that. Let's see how the price action unfolds. Yeah, bearishness here, isn't it? Okay, so with that, I'm going to look at the economic calendar now. Let's have a look at what we've got for the week. Okay, so here we've got the calendar. Let's see if we can spot what is the big news for the week, to see if it coincides with any of the setups that we've got that we need to bear in mind. Monday looks pretty weak. We've got a few minor speeches. On Tuesday, we may have a big news on the Aussie. This is the Royal Bank of Australia news. We've got some minutes and a speech. So this is where we will go into what I'm going to pay attention to is the Aussie dollar trade, because that has the Aussie currency in it, and the Euro Aussie, which we looked at. So those are the two to pay attention to from our list. I've also got a bit of CAD news here. We don't have any CAD currencies we didn't look at. No pairs with the CAD. Wednesday, what have we got? We got the Bank of Japan. Didn't look at any yen currencies, did we? We do have the pound here, news on CPI, and we did look at pound Swiss. So this could be the big mover for the pound Swiss at this time. So check what local time that is for your time zone. So this is for Wednesday. What else do we have? We've got Bank of Canada again here. We've got this one will be a major one as well. We've got the Federal Reserve Chair speaking. So this will be affecting the dollar pairs. So again, Wednesday, a bit later in the New York session. So what we're looking for that, we will look at the Aussie dollar once again, because that has the dollar in it, and the dollar South African rand, which we looked at as well. And of course, that could also affect the S&P 2 and gold. So lots to bear in mind around this time as well. What else do we have? Got Thursday. We've got some EU news here. So we may have a bit of action around Thursday London session. Beginning of London session, we've got some S&P news as well. That could be one for the S&P setup that we were looking at. And once again, on Thursday, we've got another Fed speech here. Again, that would affect it. Friday, more news on the Australian dollar. We do have a summit here on the euro, so that could add some weight, some volatility to the euro Aussie trade. So bear that in mind when you're looking at your trade setup, and be careful especially if it's around the news time, we may see the volatility start to come into the market then. So if you've traded before that on that chart, on that market with that corresponds to the news on that currency pair or market, then you want to take care and watch what you're trading, because the news may create volatility, and then you may want to not take that chance, lower your risk, watch out. Okay, so that's the economic calendar, and those are the charts we're looking at for this week. Have a good trading week, manage your risk as always. Remember to trade what you can afford to lose, and time your trades properly as well. So remember these news items and watch out for the setup. Remember, you want to see a very high probability setup, the higher probability and bigger risk reward than the higher quality of your trade. Okay, see you next week. Thanks again for tuning in. Hope that was useful for you, and I'll catch you again at the beginning of next week for some more setups and some more trade ideas. Thank you. See you soon.